Good afternoon or good morning, potentially, on where you're listening to us from today. I want to thank you for coming to our next webinar that we're doing here today at Advanta IRA, talking about using offshore accounts to protect your assets. It's a topic that I don't know if we've ever had a speaker on this before, so we're really excited to have Jamie from WHVP come on in a few minutes to share her expertise on offshore accounts and hopefully answer a lot of the questions that you all as the attendees have today. So if you're listening to us live, you can use the question box on your screen to type in any questions or comments that you might have as we go through the presentation. I'll make sure to monitor those and either answer them if they're directed for myself or share those with Jamie as well as we go along. And certainly if you're listening to the recorded version of this webinar, the contact information for both myself and Jamie will be in the slides. You can jot that information down and then reach out to us independently. My name is Scott Maurer. I'm the Director of Business Development for Advanta IRA. I've been with the company for a number of years now. By education, I'm a licensed attorney, although I don't give any legal advice for any Advanta clients. We'll go over that disclaimer here in just a minute. But my contact information is there on the screen. So any questions you have in related to my short portion of the presentation today, talking specifically about the self-directed IRA and what you can do or not do with those particular accounts, you certainly reach out to me with those questions. I'll be happy to answer them for you. Just our quick disclaimer, we always provide this at the beginning of every webinar, and it's always very important. Just to remember that Advanta IRA does not provide any investment advice or endorse any particular products. That even includes, we've had a number of guest speakers over the years come on and share their expertise and their information, and that is for educational purposes only. You're still encouraged to do your due diligence on any type of an investment or anybody that you may be doing an investment with, whether or not they've appeared on one of our webinars. And if you have questions about a self-directed IRA I should say, tax or legal questions about self-directed IRAs, we can certainly point you in the direction of a tax advisor or an attorney who can help you out with that information and answer those questions. We may be able to talk you through some of the issues, but ultimately making a determination, you'll want to reach out to those individuals. Quick background on our company. We've been around for over 20 years now, or almost 20 years. We hold over $1.5 billion of assets under management in our two offices. We have an office in Atlanta and also one in the Tampa Bay area where our headquarters is at. So we're growing tremendously at the moment. So it's an exciting time to be in the self-directed space. And we try to set ourselves apart in two ways with what we do at Advanta. One is on the customer service side. We appoint every new account to the same account, or you appoint a new account to an account manager. That's one person in our office who will be your point of contact for anything you need regarding your account, questions on transfers, investments, etc. And they'll assist you every step of the way and really give you that personal touch. The other way, and today's webinar is an extension of what we like to do from an educational perspective, and that's really informing and educating our clients and contacts about all the different things you can either do with a self-directed IRA, managing your account, making investments, and we do that through our weekly webinars. So we usually do one or two a week. We do live seminars. Those are on hold currently at the moment. Hopefully we'll get those started back sometime, I'm guessing, in 2021. And we do networking events as well. We actually have a live networking event we do every other Friday. We call it Pitch, Promote, and Prosper, where you can come on, and if you have something you want to buy, something you want to sell, come on that webinar. That event. It's a networking event. You introduce yourself and hear from other people as well. So just go to advantaira.com/events to see kind of the upcoming things that we have going on from the educational and networking perspective. For those of you who may be newer to self-directed IRAs, or maybe brand new to it, I do want to cover just a few things as it relates to self-directed IRAs before we bring on Jamie from WHVP. And that is, what is a self-directed IRA? A lot of people have that question, or maybe perhaps if you're new, you've been involved with self-directed IRAs now at one point, it was a question you had. And a self-directed IRA is simply a type of retirement account that gives you complete control over choosing your investment and the type of investment, rather than being limited to the asset classes that you might find at a bank or a brokerage firm. So self-directed IRAs typically are used to hold alternative assets, and these can include anything from real estate, mortgages and notes, private placements, precious metals, foreign currency or foreign accounts, like we're going to talk about today, and certainly a lot more. In fact, I'll go over only the two types of investments that you can't do in just a moment. And having been with the company now for getting close to 15 years, a lot of during my entire time, I've had people ask me, why haven't I heard about self-direction before? Why is this a new concept? Is this something that's just happened in the last few years? And in reality, self-direction within an IRA has been allowed since 1975. It's just that most individuals who have their retirement accounts with a bank or a brokerage firm, those firms are going to limit you to buying only those things that they sell. So it's mutual funds, stocks, other publicly traded securities. They limit you to that type of asset. IRS regulations, though, allow for a very, very broad range of investment possibilities. It's up to you to find a custodian. In this case, like Advanta IRA, this is what we do, to find a custodian who's willing to hold what we consider going to be the truly alternative assets. So getting and not diversifying within a group of mutual funds, but actually diversifying among different asset classes and maybe holding some of your IRA funds in mutual funds and stocks, but also in real estate and private placements and the things that we're going to talk about today as well. It's also important to note with a self-directed IRA, self-directed is not a, say, type of IRA that the IRS designates. The IRS designates IRAs as either traditional or Roth accounts. For self-employed individuals, there's the SEP IRA and the simple IRA, as well as an individual or solo 401k account. So the IRS doesn't say, hey, a self-directed IRA is something different than a traditional or a Roth. A self-directed IRA is either a traditional Roth, a SEP, or a simple account. Self-directed is simply referring to your ability to invest in those assets, those asset classes that you would like to take advantage of, getting that money outside of what you're being limited to by the brokerage firm. So as far as what accounts can be self-directed, again, any type of IRA, as you can see on this screen. We can do solo 401k plans for owner-only businesses. And also the big one there in the kind of almost in the bottom center of this slide, the former employer plans, those old 401ks, the old 403bs, old 457 plans. When someone leaves an employer, they can take some of that money and roll it over to an IRA account and then put that money to use again in the assets that they're choosing. So that's, again, any of these accounts on this screen can be self-directed. And getting that money moved to a self-directed account is easy. It's either doing a transfer, which is a direct movement from one IRA account to another. It's non-taxable event, a non-reportable event. You could do it as often as you'd like and in any denomination that you'd like. So it's either transfer from IRA to IRA, or if you do have that old employer's plan, that old 401k, it's simply called a direct rollover. So it's just a kind of different terminology, different paperwork, and that is something, again, in Advanta we will walk you through when you're getting your account opened to let you know if it's a transfer, is it a rollover. The key thing, again, with both of these is they are non-taxable events. There might be some reporting on the rollover side, but again, you can move money from Schwab to Advanta, Advanta to Fidelity without that money touching your hands. It's a non-taxable event. And as I mentioned at the beginning, when we talk about self-directed IRAs, we're talking about alternative assets. And this slide obviously lists just a lot of the different things that you can do within a self-directed IRA. A lot of what we talk about is real estate based, and a lot of our webinars are real estate based. Is why I'm actually excited to have Jamie on today to talk about something outside of real estate and get a little bit different perspective and some different information in talking about foreign bank accounts and offshore investing as well. But you can see the list of alternative assets on this screen. And in fact, one of the questions we get asked from time to time is, where can I go to find a list of all the things that I can do within my IRA account? And the reality is the IRS outlines in section 4975 with the IRS the things that you can't do within an IRA account. So the IRS does not have a master list of all of the permissible investments you can hold within an IRA. They simply say there's two investments that you cannot make inside of an IRA. You cannot buy a life insurance, and you cannot buy collectibles. And collectibles would include antiques, alcohol, artwork, stamps, coins, things of that nature. So those are the only two investments that the IRS prohibits within an IRA account. There's also some people that you cannot transact with. If you're looking to invest in real estate, there's some other rules to understand. But for the purposes of today's webinar, we're talking about offshore accounts. Those rules are not going to come into play. So again, outside of life insurance or collectibles, There's so many different things that you can invest in with a self-directed IRA, and that's why I'm happy to bring Jamie on today from WHVP. I'm going to turn the controls over to her in just a minute here to talk about using offshore accounts to protect your assets. And I'm going to introduce her and do my best to pronounce her last name. She told me yesterday in our initial call. It's Jamie Vrijhof-Droese, I believe. Jamie, is that close or not really?
Well, it's close enough.
Okay. All right, well, Jamie, I'm going to turn the slides over to you here and have you share your screen. And again, I would encourage anyone who's listening live as we go through the presentation, to type your question into the question box. I will make sure to monitor those and then ask Jamie questions as we go along. But Jamie, I'll allow you to introduce yourself and your company and take over the presentation from there.
Perfect. Thank you very much, Scott. Thank you so much for the kind introduction. It is my pleasure to be here with all of you this morning. I'm based in Switzerland, so all of this virtual things going on is really playing in my favor because I don't have to sit into a plane to get to all of you. As mentioned by Scott, I'm talking about using offshore accounts to protect your assets today. And I would like to start directly by showing you the relevance of our conversation today with what has been going on this year. I don't think that I'll have to remind any one of you about all the uncertainty that we have experienced this year on various different levels in basically every single country on this planet. We see this uncertainty has also played into the stock market. I have here the volatility index reflecting stock market volatility over the past 30 years. And you can see here we've had the most volatile year since the financial crisis and the second most volatile year in 30 years. So I think talking about safety and reducing volatility in your wealth is highly relevant, and that's exactly what I would like to do over the next couple of minutes that we have together. So what will I be talking about? I will start with a brief introduction of myself and our company WHVP, and then we will talk about the setup of what it means to be working with an independent asset manager, what the parties involved are, what it means to have your individual retirement account involved, what it means to be working with an administrator like Advanta. We will also talk about the benefits of offshore investing as well as the challenges of offshore investing. There are quite a few things that you should be aware of and that you should consider if you're thinking about this option. We will then become quite practical and talk about how it actually works. We will talk about the account options that you have, and then we will also talk about Switzerland as a jurisdiction. So there quite frankly, there's quite a few financial jurisdictions out there, and we will focus on Switzerland because that's where I'm based, that's where I have the most experience in. And then lastly, I will again be quite practical in how to choose your asset manager, what kind of questions you should be asking, and what you should be considering generally when you're looking to work with an asset manager. And then, as Scott mentioned, we will also have some time for Q&A. I believe that he will interrupt me if one of you have a question. Feel free to write it in the chat. I'm happy to have a pause in my presentation and answer any questions that come up along the way, or if you prefer, you can ask them at the end of my presentation. So a little bit about myself. As Scott said, my name is Jamie Vrijhof-Droese. I'm based here in Zurich. I'm a managing partner at WHVP. WHVP is a Swiss-based asset management company that was founded by my father, Robert, in 1991. You see the two of us here at one of the conferences we did back when international travel was still an option. I have over 10 years of experience in the financial industry. I started right around the financial crisis at one of the largest Swiss universal banks here in Zurich. I have over 5 years of work experience in the cross-border business, so I have quite a lot of experience with international clients, especially with US clients. I have a degree in banking and finance. I'm currently obtaining my MBA, and I have also co-authored a book on the Swiss financial industry called Swiss Money Secrets. And there will be a chance for you to get a free copy of the book later on in the presentation, so stay tuned for that. And lastly, if you're interested in learning more about myself, if you're interested in connecting or seeing more about my background, please feel free to reach out on LinkedIn. I'm quite active there. I post quite a few market perspectives and Swiss news there. So feel free to add me there. I think you should have the presentation available to you, so you can just click on the hyperlink there. So the setup. if you're interested in working with an international or generally an independent asset manager, there's three main parties involved. There's, of course, yourself as the client. I have put that on top of the pyramid. And then we also have ourselves as the asset manager and the custodian bank. So how that works is the custodian bank is the one where the money actually sits, where you have your bank account. And then you appoint us as the asset manager as the one having a power of attorney to make investment decisions on your behalf, to receive information on the account on your behalf, and to communicate with you about the account. So there we have this pyramid system where you are the main contact person of the asset manager, but you also have some contact with the custodian bank. And now if you're interested in the setup for an individual retirement account, which is what the Advanta has been quite active in, you then also have the administrator in between. So that might look a little bit scary. It might look like quite a few people involved. What's important to know there is, as the asset manager, we are the main point of contact for you. So you really have one specific contact person with the asset manager who then helps you orchestrate all the other contacts you have with the other companies. All of those, the administrator, the bank, the asset manager, have worked together for many years, so everyone has quite close relationships, and usually in reality, in practice, it is quite easily done to have a smooth communication between everyone that's involved, even though it might look like it is a bit complicated on the first slide. So working with an independent asset manager, what are the advantages compared to just going directly to a private bank? What are the advantages of just having a private banker as your contact person? I think the main advantage is in the name. It is the independence. It is that you have an independent partner, that you have someone who is really just there for you and who only takes money from you, and where there is no conflict of interest, because with larger banks there is often a lot of internal funds and financial products going on that are being sold, and the people working there have very high incentives to sell their own financial products. That completely falls away if you're working with an independent asset manager, because he or she only takes the management fee directly out of the assets that are being managed and does not take any kickbacks from anyone else. And then also, if the independent asset manager is registered with the Securities and Exchange Commission in the US, there's a fiduciary standard that they have to adhere to, meaning that they really always have to place the client interest on ahead of their own interest. Also, independent asset managers are usually quite boutique firms. So they, in Switzerland on average, they have between 5 and 10 employees. That means that we really can offer tailor-made services. We have personalized services, usually have direct access to the owners and sometimes even the founders of the company. Usually the founders stay with the company until they retire, sometimes even after that. My father, for example, has been with the company for 30 years until he retired earlier this year. And that also plays into the continuity factor. So with larger banks, if you work directly with a private bank, your relationship manager usually switches jobs every couple of years. So you get a new contact person every 1 or 2 years. Whereas with an independent asset manager, you really can build a relationship that lasts many years, often even several decades. Then also smaller firms usually have a more focused specialization. So larger banks do many different things, and they don't always have the same level of expertise for everything that they're offering. With a small company, they usually focus on 1 or 2 things. So with our company, what we focus on is US clients, but there's many other areas of differentiation that we have throughout our industry, where there's one team that really focuses on one kind of service. So you know that you have someone who is really focused on what they're offering. And then also, because of all the different parties involved, if you are for whatever reason unhappy with the custodian bank that you're working together with, you can switch banks, and you can even have 2 bank accounts at the same time while still having the same contact person. So you can switch from bank A to bank B, but still be in touch with your asset manager. You can have 2 accounts, as I mentioned, so that gives you more flexibility there. Then also, you often have lower minimum investment sizes and lower fees because the asset manager can negotiate prices and conditions for the whole assets that they have with the bank, and that is often more favorable than if you go to the bank directly yourself with just your own account. Then also, to make up for the small size, a lot of independent asset manager place a lot of emphasis on having a large network of partners. So they often have, for complementary services, they have a list of recommendation of people that they can refer you to if you have any need that exceeds just the wealth management part. If you need someone to help you with your taxes, if you're interested in gold or real estate or second passports or whatever it is, chances are quite high that the independent asset manager knows where to point you to and has relationships with people who can help you do that.
Hey, Jamie, I had a quick question. And again, anyone who's listening
Yes.
live, come obviously get your questions in as we go along. When we're talking about the people who are looking to use these offshore accounts and using an independent asset manager, do you have kind of like a what that person might typically look like as far as like their motivation, like why they're looking for the offshore accounts? And this may be something you're going to cover in a minute, but kind of wanted just to get that feel, like what kind of clients typically are coming to you, what's their rationale, what's their reasoning, especially the US based clients that are looking to come into WHVP or using offshore accounts in general.
Yeah, no, that's a fantastic question. I am going to cover that in more detail when I talk about the benefits of offshore accounts, because I think that plays into that quite nicely. But what I can say now already is what we offer, what a Swiss asset manager offers, is basically safety and a safe nest egg outside of the home country. So I think my next slide might even answer that question, because the clients that we work together with are clients who like to diversify their wealth, who would like to stabilize their overall portfolio, as I indicated in the beginning of my presentation. And I think this next slide might answer this question, because what we always tell our client is you have accumulated some wealth over your life, you have worked hard for your money, and you have a basket of wealth that you would like to pass on to your next generation, or that you would like to spend later on in your retirement. And it makes sense to really distribute your eggs, so-called, into different kind of baskets. And here I have even more information on the benefits of an offshore bank account. So people who come to us are looking for geographical diversification. They usually already have a portfolio in the US, in US dollars, mostly invested into US stocks, which is perfectly fine. But having a second account, or even maybe a third account outside of your thinking currency, outside of your home market, just balances out volatility, and, as I mentioned, stabilizes your overall wealth. So we highly advise, if there is a certain accumulation of wealth, to really think about using different jurisdictions to geographically diversify the wealth, but also to have a different portfolio emphasis. So someone who grew up in Europe, who got educated in Europe, who has maybe like a different mother tongue than someone who grew up in the US, just has a slightly different perception of the world, who has a slightly different area of expertise, has like geographical and local knowledge on what might be going on here in Europe, or the same goes for Asia, or wherever you go in the world. So that's certainly one of the key things that people are looking for. And then also we have an added layer of asset protection. So if you already have an asset protection structure in place, for example, a US trust, and you just wish to have like a little bit more into that structure, then we highly recommend thinking about having, for example, a bank account in Switzerland. So that's definitely something that a lot of people are looking for as well, that come talk to us. Then again, we have enhanced privacy protection. So the account is not a hidden or a secret or an illegal bank account. It is definitely legal. It will have to be reported to the IRS. It will have to be declared and taxed, but it still gives you more privacy protection than just opening up an account across the street in the city you grew up in. And then what we also have, a lot of people are worried about the value of the US dollar. And in my personal opinion, they are right in being worried about that. I think the US dollar might be losing more value over the next couple of months and years. And the best hedge against that, and one of the easiest hedges against that, is just building up a portfolio that consists of foreign currencies and excludes the US dollar. So if you take, for example, a third of your wealth and just put it into a foreign bank account, have it invested there in foreign currencies, you will benefit if the US dollar loses value against those currencies. And then lastly, I have already mentioned it a couple of times, enhanced overall stability. So it reduces the volatility in your portfolio if you truly are internationally diversified. After covering all the benefits and all the great reasons to consider an offshore bank account, I think it's only fair to also talk about the challenges. And here I've brought a picture to you as well. A Swiss bank account is a bit more complicated to open than a domestic bank account. It is definitely doable, and again, it really plays into your cards to have a local partner like an asset manager who can walk you through the process, and it is doable, but it's just important to have like your expectations managed, to know it is not something that can be done online within 20 minutes. It will take some time, and there will be some paperwork involved.
Jamie, we had actually, I was gonna
Yes.
say, if you don't mind, if I have a couple of just quick questions, kind of going, talking about some, especially when you talk about the geographical diversification. The question came in, said, would it make sense to move all the assets into one location, such as Switzerland, or diversify between different countries like Switzerland, Belize, and say the Cayman Islands? Like, maybe speak to that question there about, you know, putting everything in one place, or is it kind of looking at a couple different locations?
Yes, so I would say my first intuition would be to say the more diversification, the better. But of course, that what we have to consider is the size of the wealth. And also another thing to consider is I would not move all the assets outside of the US. So I think it's important to keep part or maybe even the majority of the assets in the US, maybe like 50 or 60%. And then with the remaining 40 to 50%, we can split that up. But that very much depends whether the total wealth is 500,000, a million, or 10 millions. But I would say it makes sense in the end to have a diversification over different jurisdictions, at least the US and one offshore.
And there was a follow-up question to that too that came in that maybe this is again something you're going to talk about in just a minute, but so what protections are there for the funds in a foreign account? Again, that's something you're going to talk about later. We can just kind of defer that one for now.
Yes, exactly. I would suggest that we defer that because I will talk about Switzerland and like the legal situation in Switzerland in more detail later on. So I would be happy to cover that then, if that's okay.
Okay, yeah, and again, anyone who's listening, please keep those questions coming, and Jamie, I'll turn it back over to you.
Perfect. So again, nothing in life just has benefits. Everything comes with a couple of challenges and downsides. I already mentioned the paperwork. Again, absolutely doable, but just something to expect and keep in mind. Then another thing to note is that Switzerland is a lot of things, but it's not cheap. So expect the whole process, the whole account opening and the wealth management, etc., to be a bit more expensive than what you are used to in the US. And then one of the benefits, the geographical diversification, having money far away from where you live, can also be a little bit of a challenge if you're trying to get a hold of someone who has 7-8 hours time difference and can't just pop in your office every now and then because there's an ocean between us. With all the technological advantages that we have seen over the past couple of years, especially during this year, I think, again, that's definitely something that we can work through. There's video calls and phones and emails and webinars and all of those things. But again, it's just something to keep in mind. So how to invest offshore? So if that has all sounded appealing to you, you might think about what is there to consider. And I would suggest to start with what percentage of your assets to move offshore. And that's something that I have already covered a little bit in one of the previous questions. I think this is a question of your overall wealth. I would say because of the minimum investment sizes that we have here with European banks, it makes sense, or it starts to make sense about thinking to move money offshore if you can move at least 250,000 US dollars offshore. So that would mean that you would need a total wealth of at least $500,000 US dollars for it to make sense, because as I said, I wouldn't suggest to move all of your wealth offshore, and there are some minimum requirements here for the bank to take you on as a client. If you have thought about how much money you would like to move, then it makes sense to think about which kind of assets would you like to move. Do you have some savings? Do you have a portfolio? Do you have an individual retirement account? Whatever it is, just think about that, and then don't spend too much time on it. If you're not sure what makes most sense, feel free to just reach out to a financial partner, reach out to an SEC registered asset manager, and just explain your situation, and then they can help you guide on what makes most sense. Then the next step would be to select a suitable jurisdiction. So really think about what options are there out there. Do you want to do something within the US? Do you want to do something in Switzerland or Liechtenstein or Belize or wherever? Look at the different jurisdictions, compare them to each other, think about the benefits and challenges of each one of them. There's a lot of great online resources about that. And then once you have selected the jurisdiction, have a look at the SEC registered partners over there, because as a US citizens, there's quite a few rules and regulations that an asset manager has to adhere to in order to serve you. So make sure that the partner you're choosing really knows what they're doing, and that you're not the first American that they're working with, but rather that that's something that they're quite familiar with and also have a long track record of. And then if you have a short list of maybe 2 or 3 asset managers, I would get in touch with all of them and schedule an initial consultation where you just get a feel for them, see if you feel comfortable, see if you feel that you can build up a relationship, ask them some questions. I will also get into the questions part in more detail later on. And then the last step would be to put together some necessary documents. So what is always helpful to get started is a copy of a valid and signed passport, as well as a copy of a resume, just to show a little bit what you have been doing, your educational background, your work background, and also maybe put together a couple of sentences on how the wealth was generated. Was it inherited? Was it savings? Was it capital gains? Whatever it was, just make sure that you have a clear overview over where the money is coming from and how it was generated. So your account options, there are several different options, and that goes a little bit into the thought of which assets to take in order to open up the account. The most plain vanilla solution is a personal account, so that would just be an account in your personal name, for example, John Doe. It is one account for one person, and that's it. That's basically the simplest solution. Then what we usually recommend if you're married is to set up a joint account. So that would then be John and or Jane Doe. So both names will be on the account. Both people have access to the money. Both people have access to the information on the account. But it will need both people to close the account. That is definitely something that makes sense if you're married and your relationship is in good standing. Then another option I've already touched upon a couple of times is the individual retirement account. So it is possible to move your IRA offshore. Our partner there is Advanta. So if that's something that would be of interest to you, that's definitely an option. And then lastly, again, we have the trust and LLC options. Absolutely doable. The banks here have a lot of experience in doing that. It was just, again, a little bit more paperwork required than compared to a regular personal account. Which solution is best for you is also best determined during an initial conversation where we really talk about your specific situation, your wealth, your family situation, your background, and then we can think about the options we have on the account and the source of the wealth.
Jamie, and that kind of, I think, as you're
Yeah.
talking about the account types, there's a good question that came in that talks about it. So as mentioned, privacy protection, how is the accounts kind of structured, especially, I guess, especially still if it's registered with the US? I know that if the IRA is involved, it's going to involve our name and an FBO and the client's name. Are there other ways for people to, if they're really concerned about the privacy, to be more anonymous within some of those account types? Or I guess your thoughts on that?
No, so it's not possible to have anything anonymous. The bank definitely requires the beneficial owner, so the person who really in the beginning generated the money will have to be known. So it's not possible to like hide any names or anything like that. The privacy really just comes down to like regular people knowing about your financial situation and not the IRS or the state in general. So there will be like a W-9 form required. So it's not possible to have your name removed or not shown on any of the documentations in terms of the IRS.
Right. Yeah. So I guess yeah. In setting up the bank account, certainly the bank's gonna need that information. But that is where
Yes.
people who are concerned about privacy protection, they may be using like a trust or an LLC, so it's not as generally, I guess, known to the general public who owns these accounts or who's
Exactly.
involved.
Yes.
Correct. Okay.
Correct. Yes, that's correct.
Another question came in. So, what is the
Yeah.
advantage of setting up a foreign trust, I guess, as opposed to like a U.S. trust? And again, something you're going
Okay.
to talk about as we go along. But
Yeah, no, so that would then go more deeply into the asset protection area and questions, and there are benefits and challenges with both sides, so there are arguments for and against each other, and there I would highly recommend to talk to an asset protection attorney in the US who really knows all the details and ins and outs of those kinds of businesses, because we, or myself, our company, we don't do trusts. So you would have to come with a setup structure, and we also don't do any recommendations in that field. So what we can do is we can point you to asset protection attorneys that we've worked together with in the past, that we have good relationships and good experiences with, but we don't give any specific trust recommendations, and we don't set up the structure ourselves.
and then the last question, I think, still talking. It's a question that came in again while you were talking about the account options. But is it better to? Someone's asked, is it better to have a deferred offshore account or a non-deferred? Does one make more sense? I think they're talking probably about tax deferred. Are there any tax impacts from holding the foreign account? I know that in the U.S. there's some reporting that's required
Yes.
when you hold an offshore account. But does it matter really one way or the other from a tax perspective, so to speak, with like if it's a tax deferred account like an IRA account, or just say a regular personal or joint account?
Yeah, so here's very important to note that I'm not a tax specialist, especially not a US tax specialist. But from what I'm understanding, that it doesn't really make a tax difference. So what we are offering are not tax optimization strategies. So from our understanding, the tax side doesn't really make a difference. You will have to pay taxes on the account as you would have on the US account, but there are some reporting requirements falling under the Foreign Account Tax Compliance Act, known as FATCA. I'm not sure if that answers the question. I usually recommend that people talk to their CPA, especially if the CPA has some experience with international tax accounts. And again, we can point anyone who's interested in that into the right direction if they don't have a contact person on that topic already.
Right. No, I would agree with you. I think Jamie on that one. So yeah, it's more, yeah, talk with a tax advisor, talk with a CPA who maybe has some experience with foreign entities and foreign investments to determine. I think similar to this question, what they're asking is what you answered, what we say with self-direction. It's deferred or not tax deferred. It's more about, when you're looking to self-direct or you're looking to invest offshore, is really about that diversification is the primary
Yeah,
motivator, not necessarily the tax. But if you had, that could be a secondary consideration. Definitely talk to a CPA on that. So
yeah,
um,
fully agree.
yeah, and like I said, individuals keep the questions coming, and I'll keep letting you know when I have more come in.
Okay, sounds great. So the next topic I would like to talk about is Switzerland as a jurisdiction. And I often get a lot of questions about living in Switzerland. And there are a lot of benefits, but not only to living here, but also to investing here and doing business here. And I have put together a slide with a couple of the most common benefits, I would say, are the most important things to consider as an investor. So the first one is the long history and track record. So Switzerland established itself as a financial financial leader in the 18th century when they managed the money of wealthy European royal families. So there's really no other country who has a track record as long and extensive as Switzerland. We can still see that today. So over 5% of the population are working in the financial industry, and almost 10% of our GDP is generated in the financial industry. So this is really a significant part of our country, of our identity, and especially of our work life. We have a very exceptional educational system. So we have a dual education system where a lot of people already start working in banks when they are 15. We are known for our professionalism, integrity, and punctuality. So we pride ourselves in being quite easy to do business with. We are quite reliable. And then, of course, the country is also quite wealthy. So we have one of the highest GDP per capita in the world. We have very high reserves and quite low debt levels. Even now, with everything that's going on with the corona pandemic, we still have I think a debt to GDP level of around 40 or slightly below that, compared to, for example, the US, where the level is around 120% of debt compared to GDP. Then also we have a very stable economy. We are quite robust. We also have we are very well known for our political neutrality, so we have avoided both world wars, despite them being basically at our doorstep. We've only become part of the United Nations in 2002, and to this day, we are not part of the European Union, so we have repeatedly rejected to become part of the EU. We do have very good working agreements with the Eurozone and the European Union, but we are independent, and we pride ourselves in being an Isle of the Independent in the heart of Europe. And then we have very strict federal laws and regulations. So just earlier this year, we have 2 new laws that have been put in place in order to regulate the asset management industry in Switzerland. And we also have a very good deposit protection scheme. I think that was a question that was raised earlier. So how this works is up to 100,000 Swiss francs are insured in the very unlikely case of a Swiss bank going bankrupt. And then additionally to that, all investments in stock, bonds, and physical precious metals are automatically in your own name and not on the balance sheet of the bank. So if something were to happen to one of our partner banks, which we have never even come close to that in the past 30 years of doing business, but if that were to happen, 100,000 Swiss francs plus all investments into stock, bonds, and physical metals would be insured or saved anyway, and then the rest will go into the bankruptcy proceeding. So with those structures in place, we feel that we really can offer quite a safe solutions to all our clients. And then lastly, we have the Swiss franc, which is one of the strongest currencies in the world. It is world known as a safe haven currency, which has again been shown during this year. The Swiss franc has gained quite a lot of momentum, despite the central bank doing everything in their power to keep the value at bay. It just keeps on rising and getting stronger because people feel safe here. They feel safe with our country and with our currency, especially if the world is turning upside down. So very practical, how to choose your asset manager. I think the first and foremost, it's a relationship business. It is your hard-earned wealth, and it's important that you feel comfortable with the person that you are dealing with. So if you have, for whatever reason, you don't have a good feeling, keep on looking. Make sure that you only settle with a person where you really have a good feeling, a person and a company who is aligned on your values, who's aligned on your investment strategy, and where you see yourself doing business for many years. If you have a good feeling, there are some questions that you should be asking. I have put together a checklist with 50 questions you might want to consider asking when selecting an asset manager. I am by no means suggesting that you just print out the list and ask someone 50 questions in a row. What I would do is just go through the list, see which questions you feel make sense, which questions speak to you, and then look through the website and marketing material of the asset manager that you're looking at. And if you feel that there are questions left over that have not been addressed in the material, make sure to ask those questions during the initial conversation you have. You can again download the checklist with the hyperlink on the presentation that you have received, and I have picked out a couple of questions that I would like to highlight now. First one, again, a legal and compliance question. Make sure to ask how and by whom the organization is regulated. So for us, being in Switzerland, we are regulated by the Swiss authorities, but we are also regulated by the SEC, and I think that's quite important to note, and that's quite important to be aware of what you can expect in terms of regulatory supervision. Then also that's quite a common sense question, but what are your academic and professional credentials? What does this person do to be qualified to manage your wealth? What have they achieved so far? Where are they coming from? What is their background? And then a question that might seem quite commonsensical on first sight is, what are your fees? But I think what is even more important is, how are your fees, how is your revenue put together? So is the revenue just generated by fees, or are there any kickbacks or third-party distributions that they are taking on? I think that's quite an important question to ask in terms of conflict of interest. Then also, how would you deploy my funds? I mean, that's quite straightforward. To talk about your investment philosophy, talk about what you're looking for, talk about what is important to you, talk about your values, talk about the time horizon and your risk aversion, and just make sure that that you are more or less on the same page. Then a question that I found personally very important and that I feel is not being asked by enough people is, how frequently do you communicate with your clients, and also by what means? So for our company, how we do it is you get quarterly statements by the bank, you get a quarterly report from our office, you get a yearly tax statement, and you also get up to quarterly telephone calls from our side. Plus, of course, we're also reachable by telephone and email. But here, there's no right or wrong. I think it's just important that you know what you can expect, and if what you're expecting is aligning with what the company is offering. And then the last question, how can I retrieve my investments? Also something that is not being asked enough. You should, even if you're planning on staying with the company for 30 years, it's important to know if you need money, if you want to close the account for whatever reason, how quickly can it be done, and what is necessary for it to be done. And I think that's really something that you should be thinking about from the beginning. How liquid are the investments, and how easy or hard is it to retrieve your funds?
Jamie, that last point brought up a really good someone's question. They asked, with an IRA account, how easy it is to take your RMD, which is for those of you on the call and familiar, it's a required minimum distribution at age 72.
Yeah.
You're required to take some of those funds out. So I guess ultimately, if you have your money in a foreign account, how easy it is to get cash back to, say, your U.S. IRA account with Advanta to then in turn take a distribution?
Yes, yeah, RMDs is a great topic. It is quite easy to be done. I mean, we have a lot of IRA clients here, and they all get their RMDs automatically every year, so that's no problem at all. But that again shows you the importance of working with someone who's familiar with the US needs, because if you work together with someone who doesn't know what an RMD is and how to get it back to you, then you're in trouble. But if you're working with someone who has experience with IRAs, who has experience working with US clients, then that's no problem at all, and that is something that is automatically done every year.
And yeah, and somebody else also asked, kind of, you talk about what the fees are. What are the typical asset manager fees someone might see, or what is the range of typical asset manager fees?
I mean, that very much depends, but I would say, like, it depends on the size and it depends on the person who you're talking to, but I would say generally you would look at fees between 1 and 1.5%.
Okay. There are a couple other questions that are talking specifically about kind of the actual investing, but I think maybe your next slide might talk to some of that. So I'll hold those for now. We'll come back to them
Okay,
here. Obviously,
sounds good.
so those of you who've asked those questions, and we will get to those here in just a minute. And certainly, if anyone has any other questions, get them in now so we can make sure we get those here before the end of the presentation. But go ahead, Jamie.
Okay. So the process. If you decide to move forward with this, what can you expect in terms of what are the next steps? So usually how it starts is with an introduction call or a video meeting where you can ask all your questions, where we can get to know each other, where you can get to know the asset manager and vice versa, where you just talk about whether this makes sense or not. Again, we'll talk about your total wealth, what kind of assets are you thinking of moving abroad, what account type are you looking at, and then we just determine if it makes sense to even go ahead with this at all. B, if we are a good match, if we feel that like we have a good vibe here, we can possibly build a good relationship. And if we on both sides are positive on that, then we'll talk about the service, which kind of service you're interested in, which kind of bank you're interested in, and all of that. And we will then ask you to provide some basic information. So what we will usually need is, as I said before, a valid and signed copy of your passport, a resume, your current living address, and just some more information about your family and financial background. And with those information, we will then go to the custodian bank, ask them to put together an account opening set. They will put all the account sets together, get it back to us. We will send you an email where we have all the documents in the attachment and walk you just through all those documents, what you have to complete, where you have to sign, all of that. If necessary, we can also set up another call where we walk you through the documents in more detail. Mostly this is not needed, but we're happy to do it if you feel more comfortable that way. Then once everything is completed and signed, you return it to us by regular mail. We will check it, and then if everything looks good, we will open up the account with the bank within 2 or 3 working days. Once the account is open, we will let you know. We will confirm the account opening, and we'll send you the wire instructions, so you can then send the funds from your US account or from wherever the money is to the account that we have opened in your name. Once the money has been funded, we will again let you know and set up another call or video meeting where we talk about the initial investment in more detail. And then we will automatically transfer into this ongoing communication that I mentioned before, the combination between bank statements, company reports, emails, and tax statements. So thank you so much for sticking with me for so long. I know it was quite a lot of information. For anyone who's interested in learning more about Switzerland as a financial industry and Switzerland, like investing in Switzerland, taxes in Switzerland, it's like more generally history, politics, and all of that, I very much invite you to send me an email. I'm more than happy to send you a free digital copy of the book that I have co-authored together with Robert Bauman. Just send an email to jv@whvp.ch, and I will be more than happy to get that to you later today. Also, I know we have a couple of minutes to answer any remaining questions, but if something comes up in the next couple of hours, or if you have anything specific that you would like to discuss with me bilaterally, or if you have like a complicated case that you'd like to discuss with me, feel free to send me an email. I'm more than happy to answer any questions that you may have. And then I would say, with that, I give it back to Scott to answer the remaining questions that we have.
Sure. Yeah, Jamie, we did have a couple more that came in just a minute ago, and a couple of them are talking really kind of about the same, a lot of the similar questions.
Okay.
And that's kind of, someone said, I'm not clear why I would move part of my assets offshore. What are the options for investments in an offshore account? What do the returns look like? And then again, a couple other people also, what type of investments are typically the funds invested in? What are the top 3 investments you see with US clients? You know, those kind of, so maybe talk about a little bit.
Sure.
So when the funds have been placed into the account, what types of investments or what the top investments are that you see that make sense for US individuals, or maybe just individuals in general?
Yes, definitely. So the first move is usually to just move the assets out of the US dollar. So we have different foreign currencies. I mean, what we like there depends very much on what's going on the world, like on the globe as in a big scope. So we have the Swiss franc, for example, we have the euro, we have Japanese yen, we have many different options available. And then depending on our like economic outlook on those countries, we overvalue or undervalue those foreign currencies. Then we also have fixed income investments. This is a little bit tricky now with the low interest rates, but we're still looking out for company bonds that are decently rated and hopefully pay some interest rate. There again, we also have all of those fixed income investments outside of the US dollar. So even if the interest rates are not incredibly high, we can still make some money on the strengthening of the underlying currencies. And then, of course, we have stock investments as well. There, our main focus is on Europe and Switzerland. More recently, we have also done quite a bit in Canadian mining shares. We have also done some stuff in the Asian Pacific area. Again, anything outside of the US with a focus on Europe and Switzerland. What we typically look at, we are quite, our company is quite a conservative asset manager. So our main focus is capital preservation. There are other types of asset managers out there. There's other types of specializations out there, but what we are looking for is stable and dividend-paying equities in countries that are also stable. And then the last portion of the account is usually in precious metals, mostly in gold. That's something that we feel a lot of our clients like very much. Having said all of that, all our mandates are discretionary asset management mandates, and all of those mandates are tailor-made. So we do have some baseline strategies where we have like a bandwidth for the different allocations, but we talk to each and every client, and therefore it's quite hard to give any like performance measures or anything like that that makes sense, because it just very much depends on your risk aversion, on your time horizon, on the money that you're employing. But if anyone's interested in talking about that in more detail, I'm more than happy to have a one-on-one conversation. I hope that answers the question more or less.
Yeah, I think that's kind of, they were just kind of look at the different, what other options are available. One question, I don't know if you know the answers or not, but a question that said some countries do have high yield savings accounts that I guess generate 10+% interest.
Yes.
If you're familiar with those, does that require residence in the country to get the higher yield?
Okay, so that's not something that Switzerland offers. Quite on the contrary, we have very low interest rates. So that's something that you would have to look at with someone who is specialized in those countries that offer those kinds of accounts, because that's not something that we here in Switzerland can offer, and therefore I don't know if residency is required or not.
Okay. So in the next question comes in the U.S. for any cash that is held. And this is important for this. I think the person asked the question, understand FDIC insurance covers cash deposits in the United States. Is there a similar insurance in Switzerland for that kind of holding cash, but then also what the interest rates are in the savings? I mean, like you just mentioned, they're very low right now, but maybe you can just speak a little bit to that.
Is that question like the insurance of cash in terms of bankruptcy of the bank?
Correct. Right. That's what FDIC
okay.
covers in the U.S.
Okay. So yes, that's what I briefly covered earlier in terms of like the protection scheme we have here in Switzerland. So up to 100,000 Swiss francs are insured, and then like all the cash holdings more than that go into bankruptcy proceedings. But as I mentioned, the investment stocks, bonds, and physical precious metals are excluded from that. And since our accounts usually are fully invested, it is quite rare that we have significantly more than 100,000 Swiss francs laying around.
Question said you're talking about asset protection in the U.S. That's code for insurance. Is that what you mean? And I guess that's kind of in the case in the U.S. we do talk about asset protection as a way to help protect assets. As you know, insurance I think is a method of asset protection as opposed to being the equivalent.
Yes.
Was that something you would agree with?
Yes, I fully agree. I think insurance is a very valuable part of asset protection, but it's not the one I was referring to, because with insurances, we don't really have a lot of like connecting points. What I'm talking more about is structures like trusts and LLCs.
Right. Okay. The last question I think is a good one to end on in this sense, and that someone is asking what assets make sense for a retired client who'll be living off the money. I think the answer to that might be that they need to contact you probably so you can get a better. Yeah, that's kind of a very general question in a sense.
Yes.
It might have you might go a lot of different ways with that.
Correct.
So maybe
yes.
share again, Jamie, how people can get a hold of you with some of these questions.
Yes, exactly. So for any questions like the one we just heard last, it's best to get in touch with me directly. You can send me an email to jv@whvp.ch. That's the best and most easy way to get a hold of me, and I'll be then more than happy to get back to you and schedule a time and date to give you a call or give you a video call to talk about all of those questions in more detail.
All right, Jamie, appreciate you joining us today. I'll make sure I'm showing my right slide here too. So anyone has any additional questions on self-directed IRAs, here is my contact information. I'm more than happy to answer your questions as well. Obviously, Jamie just gave her information. And Jamie, thank you again for the presentation. It was very informative, very educational. Like I said, it was something that we have not seen a lot of our clients, we haven't seen a lot of people come on and talk about this. So it's a very unique topic. And so definitely appreciate your time, your expertise. Any final thoughts?
No, again, thank you so much for having me. It was a lot of fun. I hope it was helpful. I hope it did provide some value. And if people are interested in learning more about those kind of topics, feel free to check out our website. We have quite a lot of resources there. We also have a podcast where we talk about different topics. We have a YouTube channel. So make sure to check those out. And again, make sure to reach out to me for the free ebook if you're interested in learning more about Switzerland.
All right, Jamie, thanks again. Thank everybody for attending a live event. I look forward to seeing you on our upcoming webinars as well. Thank you.
Thanks. Bye-bye.
Bye.